All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to start off by just showing you something that this kind of blew my mind. I did not know this existed. So I don't necessarily need to show you the whole clip, but what this is somebody copying and pasting a Bitcoin wallet address from a receive wallet here, and then they go over to the send tab and they paste it in. And what they noticed is only the first 3 or 4 characters of that wallet address is actually the same, and the rest of the wallet address is completely different. And so this person comes out and says, well, I don't understand why. Doesn't that mean there's something broken with the software? But as it turns out, this is actually malware that has infected the computer. It's a copy and paste malware. So it's a computer virus that is trained, or programmed, I should say, to wait for you to copy and paste a Bitcoin wallet address. Then when you paste it into a receiving address, it will change the address and therefore steal your Bitcoin. So always make sure that before you hit send, you check the wallet address, check every single character, make sure it's exactly the same. Because of course, if it isn't, if you were to fall victim to one of these computer viruses that changes what you paste after you copy it, then once you hit send, there's no way to get that Bitcoin back. Someone will have just received your Bitcoin and there's nothing you can do about it. So that was new to me. Hopefully it's new to you, and hopefully you always do the right thing and make sure you double and triple check your wallet addresses before you send Bitcoin or crypto. Over in the traditional finance world, of course, we've got CPI data coming out tomorrow. Trueflation has us down here on 2.4. The state of the UK is a conversation for another day, but this is what we're focused on, particularly as a trader. I think 2.4% is a little bit ambitious. The current forecast, where is it? Here it is, sits at 3.1%. So are we going to come down on a 3 handle? I think almost certainly we're going to see a 3 handle. Could we see sub 3.1? Quite possibly. It's going to be an interesting week. The thing about the cycles is the cycles tell us, as I've been saying over and over again, we've got to be open to seeing a rollover into that next daily and weekly cycle low. So I don't know if that suggests either that we're going to see a slightly hot CPI print, or if the market's just not going to care about whatever the CPI print is and sell off anyway. But the cycles do tell us to be open to downside, and that is why I've been positioning slightly more defensively over the past week or so. Ahead of CPI inflation data, the ISM for manufacturing in orange, as you can see, has resumed a downtrend. For services in white has also resumed a downtrend, and this tells us that likely we are going to see a significant drop in CPI, which is in blue here, and that likely also this could be sustained for some level of time. All of this has functioned as bullish fuel for the melt up so far. It's been right ever since the market made its bottom in October, ever since inflation peaked and started to come down. So it's right until it's wrong in trading, as I often say. The interest payments on the US debt have gone absolutely parabolic. Have a look at this. And they're nearing in on $1 trillion just in interest payments alone. So something has to be done about this. This cannot go on forever. And there's a couple of pieces of fundamental or macro data that I keep an eye on. And one of those is US cyclical employment, excluding manufacturing, which has turned negative year over year. Now, the thing is, whenever this happens, it usually predicts a recession is coming in 5 to 6 months. So that makes perfect sense to me, and I'll show you why. On this melt up chart that's become the staple of this channel, you know that whilst this yellow line was kind of an arbitrary squiggle, it was more of an outline for illustration purposes. It never was supposed to predict the top would come in exactly at this time and on this date. But overall, that we were going to form an inverse head and shoulders, break out, and then have a blow off top move to new highs before then a massive deflationary bust. And whilst now I think this yellow squiggle is likely not going to form the real shape, I think much more likely, given where the cycles are, we have to pull back into that weekly cycle low, and then we can have a chance at attacking new all-time highs. I do think that walking out 5 to 6 months would give us the perfect time for this metric to continue to roll over, and therefore we would likely get this big deflationary bust come towards the end of the year. And furthermore, to evidence this point further, we also have the 10-3 yield curve. Whether you use the 10-year 2-year or the 10-year 3-month yield curve, this is something that retail gets wrong all the time. When the yield curve inverts, which simply means the yield on the 3-month or the shorter term bonds is above that of the longer term bonds, such as the 10-year, retail always loses its mind. They always lose their mind because they say things like, that's it, every time that's happened, we get a recession thereafter, but it usually lags 12 to 18 months. In case you're wondering why, the yield curve inversion usually predicts recessions because it shows that something is broken in the system, right? If you're locking up money in a bond for 10 years and they're paying you less interest for that than for locking it up in the short term, it speaks to both uncertainty in the long term and a requirement for you to buy government debt in the short term. So everything is kind of backwards here. That's why we call it an inversion, right? You should have longer term. The longer you lock your money up, the more yield you get. But that's not what we've had. And not only have we not had that, but the inversion is so steep that this is indeed setting us up for a massive, massive, massive bubble pop, in my opinion. But the reason I bring this up is this is, like I said, something retail gets wrong all of the time. What retail gets wrong about this is as soon as it inverts, they go, that's it, recession's coming, that's it, recession's coming. But the key nuance to this is it's not just when we invert, i.e. drop below the zero line. It's when we invert and drop below the zero line and then turn back up and recover the zero line. That is where the recession trigger comes from. So if it's taken 8 or 9 months to come down, you know, it's reasonable for me to expect that this would start to recover over the next 5 to 6 months, maybe slightly more. And then once we cross back above the zero line, once we revert the inversion, whereby we see the longer term bonds paying a higher yield than the shorter term ones, that to me will be a massive, massive, massive recession trigger. So again, this is sort of lining up, isn't it? We've got enough time for this to slowly invert towards the end of the year, or revert, I should say, towards the end of the year, cross back above that zero line and trigger a recession, which will be right around the time that we expect this metric as well to flash the true recession trigger. And all of this kind of makes perfect sense from a cycle standpoint. We've had the bottom, we've moved up, we know we've got a daily and weekly cycle low to form. Then coming out of there, we've got one last shot at cracking the all-time high before we have that final deflationary bust as this yellow arrow kind of details, and then we'll get to what to do in pink here as we get there. As always, it's important to know where you're wrong. If we get a decline into a weekly cycle low that bounces up and then thereafter rolls over shortly, then what we can say for sure is new all-time highs are not coming. Lose this low wherever it forms. We come down and take out that low. We have a failed cycle and we're probably going straight into a big bear market all over again. We're probably going straight into recession territory early. So that's where we're wrong. That's where we invalidate this whole thing, this whole idea that we're going to run up to new all-time highs this year or early next year. All of that becomes invalidated once we find that cycle low and then roll over and take that out. So we have a good line to manage the risk off. This is why I've been saying patience, 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 because once we get down into this weekly cycle low, whether it forms here, lower down, or much higher up, wherever we find that weekly cycle low, that becomes the line in the sand to say anything below that, and we are truly going to enter a big bear market, a big crash. But of course, having that level to manage your risk around also means that you can go full exposure or even overweight exposure to equities, attacking the all-time high, which I still believe is very much in play. Over in crypto, I'm also seeing a couple of warning signs, and I wanted to start with this. This is the transfer volume from miners to exchanges. As you can see here, this is enormous, absolutely enormous spike. So usually whenever miners do this, it's because they're about to sell their Bitcoin on the exchanges, probably to raise capital to buy more mining equipment or to cover overheads. But either way, this is a large amount of Bitcoin coming from miners and a lot of potential sell side pressure. What's really interesting about this is, as the primary case for me has been that we will have this blow off top this year and then spend the remainder of the 4-year cycle in a 3-year bear market. If this spike in miner selling leads to some kind of basing here or some kind of decline for the price of Bitcoin, then I have to just scratch off this whole left translated thesis, this whole idea that we're going to top this year and then roll over. So if we see any kind of basing or pullback as a result of this, then of course it will be time to readjust my strategy to go back to probably looking at a 4-year cycle where we make the bear market low and then the cycle top comes 3 years later, followed by a 1-year bear market low, and therefore I'd be expecting the top to come 3 years later. So at this moment in time, anything and everything is on the table, but this is somewhat of a concern. Another concerning thing I'm starting to notice is, and shout out to my boy Kemazabi here because he pointed this out to me yesterday as well, this whole idea of a top that comes this year, right? A new all-time high this year. This was absolutely laughable to the vast majority of market participants only 4 or 5 months ago. This whole idea seemed absolutely nonsense, and I was one of the very, very few out there saying that this is how I see it. This makes the most sense to leave everyone that thinks the halvings drive bull markets holding the bag. But something I'm starting to see more and more, and so is my boy Kemazabi, is these are getting posted all over Twitter. More and more people are starting to like this as an idea. More and more people are starting to post this as an idea. Now, I still don't think this is crowded. I still don't think this is the consensus trade at the moment. But if this starts to become consensus, if this starts to become everybody's base case, then I think what I have to do is accept that this is probably not going to happen, right? The reason I was so confident about this is because almost nobody thought it was even possible back when we were in this neighborhood here. And so when I started to post it back then and say this makes the most sense, that was because I was betting against the crowd. I was betting against the herd, just like how I bet against the herd when we were down in this neighborhood and in this neighborhood for the stock market. I was so confident about getting a huge move off the lows because everybody was posting 2008 fractals in this neighborhood. And similarly, I've been so confident about seeing new highs this year, amongst a couple of other reasons, mostly though because almost nobody thought this was possible. But if this starts to become something that dominates Twitter, if this starts to become the new 2008 fractal, right, that we saw at the lows for the stock market, if everyone seems to start to think that this is what's coming, then we can say with high confidence that it's not going to happen, right? We're going to probably start to base out here somewhere and then do Bitcoin things once more. So anyway, that's something I'm keeping an eye on. We should know pretty soon, because if we don't start to go straight up pretty soon, then we're probably not going to do this. As always, unbiased, flexible, ready to pivot, and open to all possible outcomes. I also don't like what I'm seeing out of the news here. We're seeing $800 billion bank Standard Chartered say that Bitcoin is going to hit 50K by the end of the year and could even break 120K next year. Now, just from being in the Bitcoin space for as long as I have, just from trading Bitcoin as long as I have, a pattern that is undeniable as far as I'm concerned is whenever there's a bunch of FUD out there, whenever there's a bunch of negative news about Bitcoin, it usually means that's a good opportunity to start loading up. It usually means they're using the media to push the price down, to shake out the weak hands so that they can hand those weak hands coins over to the strong hands and the big boys. And unfortunately, the inverse is true as well. Often when you start to see these big sort of predictions, when you see the mainstream media start to get super bullish on Bitcoin, it can be a sign of a dip to come. Now, I'm not saying that's the case, because also at the same time, it's kind of confusing, but at the same time, we will see them ringing the alarm all the way up to the top, so as they rope in as much retail exit liquidity as possible. So maybe this isn't a bad sign, but it doesn't make me feel super comfortable either. Something in our favor though is this cycle is objectively different to the prior 3 cycles. The supply available for trade is decreasing this cycle for the first time ever. So with the supply decreasing and more adoption anticipated to flow into this space, it seems to me and to most people that a supply shock is likely not too far away now. We also have things like Vanguard, which has $7.2 trillion under management, recently increasing its investment in Bitcoin mining stocks and bringing its stake to more than 560 million worth of shares. So this has been plaguing me for a while. The fact that Bitcoin has been trading sideways, but the crypto-related equities that I also trade all the time on this channel have been tearing higher. Usually, those crypto-related equities move slightly ahead of Bitcoin. Usually they lead. If they start to pull back, it usually tells you that Bitcoin is about to have a dip. And of course, the inverse is true. If they start to break out, it usually tells you a big Bitcoin pump is coming. But we've had divergence now for a full 2 weeks. Coinbase, MicroStrategy, Riot Blockchain, Marathon, the likes of all of these sorts of companies have been on a tear for 2 weeks, and Bitcoin has just gone sideways. So I don't know if that speaks to a massive Bitcoin upside move coming. That seems to be the safe bet, at least historically speaking. Usually when those crypto-related equities start to rally, Bitcoin follows suit shortly thereafter. But this divergence that's been going on for 2 weeks now is unusual. I can't really recall a time when there was a divergence that lasted more than 3 or 4 days. So for us to be sat here 2 weeks later with this massive divergence is quite unusual. But if history is anything to go by, then the price action of the crypto-related equities tells me that Bitcoin is due a pump any day now. It's not just the institutions accumulating Bitcoin, because the whales have been as well. They've added around 90,000 Bitcoin over the past month, close to $2.5 billion worth. And we have yet another all-time high for the hash rate, as you can see here. So absolutely monstrous capital investment into the Bitcoin space, monstrous increases in the security of the network and the underlying value backing the Bitcoin protocol. I'm not really a moving averages guy, but we all know what they mean. And right here, we have got a weekly golden cross of the moving averages at the hard right edge of the screen. So usually when this happens, we see major upside for the price of Bitcoin walking forward. And the correlation of Bitcoin with altcoins is dropping. You can see in orange here, all of these orange circles denote the correlation in 2022, with the blue showing the correlation of Bitcoin and altcoins this year. And as you can see in every single case, the blue is lower than the year before. So what we are seeing is more and more maturity in this market. What we're seeing is more and more people start to realize that there is no second best, as Michael Saylor is famous for quoting. And if we look at the Bitcoin dominance, to me, this speaks to further upside. And I kind of covered this a little while ago. I analyzed this chart before, But if we keep it really simple, let's pretend this isn't Bitcoin dominance. Let's forget that a lot of us like to trade altcoins or hold altcoins. Let's forget that there's probably a handful of you watching this that think you hold the next Bitcoin. Okay, let's just put all of that aside and just look at this as if this is some arbitrary tech stock or any stock for that matter. If this was indeed just a stock, then what do you see? Because I see, objectively speaking, a massive accumulation and a bottom. I see a range breakout with a backtest and a resumption. And I see a well-established uptrend as denoted by the red upward sloping trend line. So if I was trading this like a stock, the buy entry would of course come from the breakout or the retest of the neckline base here. And after this pump, I would be expecting nothing short of a big rally up to at least the mid to high 60s, if not 70%. I would not be, if I'm being completely honest and objective, I would not be seeing my entry here pop up and then thinking, that's it. The move is done. This is what comes next. Now, anything can happen. It's a market. But when I look at this chart as objectively as possible, what I see is undeniably a range breakout, backtest, and a resumption higher. So you tell me in the comments why we can't hit 70%. Why is this impossible for Bitcoin to have this big rally up to all-time highs before then we see people start to exit Bitcoin into altcoins as they pump and fly? That's where I believe we would get the alt season. And of course, this correlation will likely continue to drop if that's the case. So if you disagree with this, let me know in the comments. That's absolutely fine. So here's gold. Gold, we've got a change in market structure. We've broken above this. I think it's time to close this short. I think it's time to flip long here. So we're going to get long. We're going to put a long entry here. We're going to put a stop below this low here. And we're going to see what the market can give. Now, I'll be honest, I don't feel super confident about this trade, but I have to take it. We've got a breakout, a retest, resumption of the downward sloping blue resistance line. We're above this, indicating a change in market structure. So it's time to get long here. Like I said, it's time to do this and see what the market can give. In the worst case scenario, I think if this does end up being some kind of CPI trap that rolls over into another daily cycle low, I do believe that once we get down to that daily cycle low, that will be the highest possible probability setup that this market is going to have to offer for a very long time. So if we, in the worst case scenario, we have to pay a stop here, we'll get back in down here. And then I think the run to all-time highs will begin. But for now, we're long gold. We are no longer pushing a short, and we'll see what the market can give. We've got a tentative breakout from silver. So I think possibly if we can hold above this level into the close today, then this can be a long right here for silver. So I'm yet to add silver. I have flipped on gold. I'm looking for just a little bit more follow through from silver, but expect me to have added this position by the end of today. And of course, this should be no surprise to you because I've been calling this trade out for a very long time now. Same with gold as well. So hopefully that's that. Is this Bitcoin pump loading? Are we going to get this breakout? If so, then of course we'll add exposure here. If not, we've got plenty of exposure elsewhere. Ethereum's still doing a whole heap and nothing. The crypto related equities though, like I said, look, these are pumping massively. We've got an 81 handle for Coinbase as of yesterday. We're over 400 for MicroStrategy. Again, double position here, massive, massive trade. Same is true of Riot, double position. Look, just keeps exploding higher. This is going to be way, way, way higher up. I'm not even interested in selling either one of these positions. I'm only going to be adding to these positions for a while. I think we can get all the way up to some silly numbers, but we'll see how that goes. Unless we get a true technical breakdown, then I'll keep pushing these trades. Same is true of Marathon as well. We've got this monster Marathon pump going on. So some level of pullback up in this neighborhood would be perfectly reasonable to expect. But, you know, if Bitcoin is going to keep doing Bitcoin things, then these blockchain stocks are going to keep doing Bitcoin things as well. Here's the S&P. So still in no man's land. As I said, between this blue line here and the stop loss, which has been choked up, anywhere in this neighborhood, I think is no man's land, means nothing. But break above, potentially on a low CPI print, and we're going to see some bullish action before we get into that weekly cycle low time frame, which we know is coming up. Break down from here below the stop loss, which has been choked up, and of course you know what comes next, right? Same deal. True of the Nasdaq as well, isn't it? All of this is kind of no man's land below those lows, and we can say for sure we're going lower above these highs, and we can say for sure we're going to be going higher for at least a short term. But either way, all roads point to that weekly cycle low time frame. So Tesla working on that gap fill at the moment, but we got a line in the sand, don't we? This blue upward sloping support line, break down from there, and we will lock in the profit between here and here. Hold that line, and it's reasonable to expect further upside for Tesla. Apple still kind of hanging out in no man's land. It's also above its upward sloping support line, so all the while we're above the blue and the yellow. Happy days. Break out of this downward sloping red resistance line, and we can entertain even adding positions and moving stops up. I keep forgetting to cover the VIX. I've kind of switched off from the VIX at the moment, but I know a couple of you have been asking me to cover it. The reason I've kind of switched off of this is twofold. One, my broker changed the way I can trade the VIX, and I have to use futures now, and I just don't really like them, to be honest, but it is what it is. So I've not really been paying much attention. The Fed, and you can type this into Google or Twitter and you'll be able to find it. The Fed has a monstrous short position on the VIX. So this thing's not really behaving like it should do. This is some kind of counter-trend bounce into logical resistance, as you can see here. I think this should have probably spiked higher. Maybe that's to come. Maybe we will get some kind of big push out of here. But to be honest, I'm not really super interested in the VIX. For me, the trade for the VIX is going to be when we come out of that weekly cycle low for the stock market. As I keep saying, once we come out of here and we have a crack at all-time highs, at some point, whether it tops early and rolls over or whether we do indeed have this big melt up and we come out and take out the prior all-time high, wherever the market tops, that's what I'm going to be looking at as my entry for the VIX. So I'm kind of sleeping on the VIX until we get what I believe is a breakdown. Now, like I said, whether that comes from here or at all-time highs is anybody's guess at this point. But for now, one day at a time as always, let's find that weekly cycle low. Let's get a long out of there, and then we'll see what the market can give. Once that market then rolls over, that's when I become super bullish for the VIX. But that might not come for a good 3, 4, 5, even 6 months from here. So I'm not really interested in playing these small counter trend bounces too much. I'm not super interested in any of that. What I'm actually looking for is some kind of chop, say a rollover and then a monster spike. That's the trade I'm looking for, something like this, as we have that big deflationary bust or some big recessionary trade. That is for me where I'll be looking to get bullish the VIX. But as you can see, this could well be quite a few months away. So make no mistake about it. When I think it's time to long the VIX from the low numbers to potentially new all-time highs, when I think it's time to get above this COVID peak from the lows, I'll make sure I let you know well in advance. I'll make sure, because I want to capture this trade. I think this is going to be one of the trades of the year, and I've been saying that for pretty much the entire year. If we are going to make new highs, then this should make new lows, and then when the stock market tops, this should spike. So make no mistake about it, I want to be part of this trade. I want to make sure I capture this trade. This is going to be an epic trade, but I think it's a few months away. So can I really be bothered to get in here and play these little bounces? Not really. I want to wait for a big macro move and then try to capitalize on a huge VIX explosion. So that's it from me. I hope you found it interesting. CPI tomorrow, as always with CPI, probably going to be some games. Probably going to have to let the dust settle a bit. For me, my focus is going to be on keeping a close eye on the stock positions I've got open, making sure I know my levels. Like I said, I don't want to see losses of support. I'm going to be keeping an eye on the indexes to see if we can get out of those no man's land zones that I've identified. And I'm going to be focusing mostly on the precious metals today. If we can get a strong close today, then I think we can add a silver long. Like I said, we've already flipped long on gold. So we're long and strong, see what the market can give. Don't go super full degenerate extra leverage on these trades, because there's a good chance that we are going to have to see one more rollover into a weekly cycle low for gold. So just be open to that. Just because we've broken out doesn't mean you have to go degenerate. Remember, always manage risk, always keep your position sizes appropriate, 1 to 2% of your account, and that is how you stay in the game. That is how you increase your account size over time. Have a great day, everyone. I'm your boy Camel. Until next time, take care. Peace. Bye.